Investing in the stock market means buying shares of companies listed on stock exchanges like the NYSE or NASDAQ. These exchanges connect buyers and sellers, determine prices through supply and demand, and provide a marketplace for trading shares of public companies. How to start investing? To invest, you'll need a brokerage account, which functions like a bank account and allows you to place trades. Most trades today are done through online brokers. Stock market hours run from 9:30 a.m. to 4 p.m., but some brokers offer extended pre-market or after-hours trading sessions. Understanding market indexes. The market's movements are tracked by indexes like the S&P 500 or NASDAQ Composite. These indexes help measure overall performance and trends. Investors can either buy individual stocks or diversify with index funds or ETFs, which follow the performance of entire sectors or the market as a whole. Trading versus long-term investing. Stock trading involves buying and selling frequently to profit from short-term changes, while long-term investing focuses on growth over time. Market trends are often labeled bull or bear, depending on whether prices are rising or falling. Historically, bull markets last longer, leading to long-term gains despite periodic downturns. To summarize, we note 3 key points from the beginning. Diversification reduces risk by spreading investments across different companies or sectors. Long-term investing is generally more stable and profitable than short-term trading. Market corrections and crashes are normal, but staying invested helps recover losses over time. Understanding the basics of how the stock market functions empowers smarter investment choices. Whether trading actively or investing passively, patience, research, and diversification are key strategies. With time, consistent investing can build wealth, even through market fluctuations and economic cycles.